Welcome back to the Forex Basics. This is a opportunity for us to now talk about technical analysis and technical indicators. So technical indicators can consist of a number of different tools to use, and there are hundreds and hundreds and hundreds of tools. We're not going to go through all of them here because I don't even use all of them. I use a handful. So I'm going to clear this screen really fast so that you can actually see the screen more clearly. And we are going to really talk about something very specific, which is just going to be candlesticks and moving averages. Okay. So, what is a candlestick? A candlestick is a piece of data, it is a recording of price movement in a specific session. In the charts, there are different trading time frames, monthly, weekly, daily. Mainly, you'll see monthly, weekly, daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute. That's what you'll typically see on an average chart. I have more because over time I've just discovered I like to see other different time frames. So each one of these candlesticks, we're on a 15-minute chart. Each one of these candlesticks represents 15 minutes of time that has passed. Okay. This is going to help us visualize how price is actually moving. There are different size candles. You have really large candles, which represents a lot more volume or activity in the candle. Then you have really small candles, which can be some sort of a determination that price is losing steam from its previous movement and things are starting to change. And then you have long wicks or shadows, both bullish and bearish. So when a market is bearish, that means that price is moving in a downward trend. And when the market is bullish, price is moving in an upward trend. So technically, this would have been a bearish movement. And bullish movement would be the opposite to that, which would be what we're seeing here happen. Price is moving in a bullish market. Okay. These candlesticks individually can tell you a story, and then they can also be grouped together to create different types of patterns. These patterns can be found all over the internet. I won't waste the time trying to go through each and every single one of them here, but understand that these patterns do give you signals and insight into what the market is actually going to be doing. But you have to understand which chart time frame is more important than the other. And those are things that we discuss in our actual course material, in our mentorship. We let you know overall your higher time frames have more importance than your lower time frames do, but each one is important and each one tells a specific story for you to learn how to trust so that you know what to do next. Then we have our moving averages. The moving averages themselves can be used to help you determine where you are in trend, where price is going. I use a handful of different moving averages for different reasons, but you can see a 9, a 36, and a 70, and each one of them have a specific purpose. The moving average basically calculates the previous amount of candles. So let's say if we use a 70, this is calculating the trajectory of the previous 70 closed candles to see where the potential direction is going. I'm not using this to tell me exactly what price is doing, but it's just giving me an indication of how I need to look at the market. Then you also have the 9, which is the previous 9 candles, and then the 36, which is the previous 36 candles. Each one of these is used in combination with each other to help me determine what I'm looking for to execute an actual trade when it comes into price. Okay. Then you have just your overall technical analysis, which allows for us to analyze historical price data, which can help us potentially predict future price movements. We do this as known as top-down analysis. So we always start at like our highest time frame possible, which would be like a monthly chart. And then we use this monthly chart to determine what's happening from a candlestick pattern standpoint to know where price is going to potentially be going next. Okay. So from there, we go to the weekly chart to analyze the weekly to see exactly what's happening there. Then we drive lower and lower and lower until it's time for us to actually execute a specific trade. Within our specific trading, technically, we are looking for very important points of breaks and retests. So a break would be if a floor or an area of support is broken by price, or another type of break would be is if the ceiling is broken by price. Okay, this would be considered a ceiling or also known as resistance. So by understanding resistance and support and then also breaks and retests of price, then you can gain access to having a better idea of where price is going to go based on different confirmations. You never know 100% where price is going. This is about having multiple confirmations that give you insight into understanding the potential for where price is going. That's why when we discussed those market orders in the previous video, we do talk about understanding your stop loss, knowing where to put a stop loss, because if you know where to put a stop loss, that can help mitigate the amount of loss that you're going to take if you are incorrect in your actual assumption of where price is going to be going. If you want to have a better understanding of the Forex market, a better understanding of the nature of candlesticks, how to utilize them, what patterns of candles actually work for achieving the success that you're looking to have financially, please hit us up. Go to vagranttradercollective.com or hit us up on Instagram at Vagrant Trading Academy or at Vagrant Trader Insights. And either one of those will work well for you. Shoot us a message. We can get you the right link and send you exactly where you need to go, whether it's mentorship or whether it's going to actually be a full course. Everybody may not need a full course. Some people have already been trading, they have a basic understanding, but they're still not gaining access to the results that they want. We can also help you there as well. Please subscribe, put up a like, give a comment. Stay tuned to the next series. We're going to be exploring fundamental analysis as we move through this next series of conversation. Thank you so much for your time. Take care and